Welcome to our deep dive into the world of unbelievable tax loopholes. You might think taxes are all about boring forms and endless calculations, but hold on to your calculators because we're about to uncover some of the most obscure and downright surprising tax loopholes that could save you a bundle. From quirky deductions to bizarre credits, this video will reveal how some savvy taxpayers have turned the tax code into their personal treasure map. Get ready to laugh and learn as we explore these hidden gems that even your accountant might not know about. Whether you're a tax novice or a seasoned pro, you'll be amazed at the creative ways people have navigated the tax system. So, grab your popcorn and prepare for a wild ride through the wacky world of taxes. Because who knew saving money could be this entertaining? What is a tax loophole? A tax loophole is essentially a provision in the tax code that allows individuals or businesses to reduce their tax liability in ways that lawmakers didn't intend. Unlike legal tax deductions, which are explicitly outlined and accepted, loopholes often exploit ambiguities or oversights in the law. For example, consider a business that can deduct expenses for a home office, but then cleverly expands that definition to include a lavish vacation home as a retreat for work. While this may raise eyebrows, it's technically within the rules. The significance of tax loopholes lies in their ability to shift tax burdens, often benefiting those with the resources to navigate the complexities of the tax system. For individuals and businesses alike, these loopholes can lead to substantial savings, allowing them to invest more in their ventures or personal lives. Understanding these nuances can empower taxpayers to make smarter financial decisions. The history of tax loopholes. Tax loopholes have a long and colorful history, evolving alongside tax legislation itself. One key moment came in the 1913 introduction of the federal income tax, which opened the floodgates for creative interpretations of tax law. Fast forward to the 1980s, when the Tax Reform Act aimed to simplify the system but inadvertently created new loopholes that savvy taxpayers quickly exploited. Public perception of these loopholes has shifted dramatically. What was once seen as clever financial planning is now often viewed with skepticism. Take the infamous case of the Buffett rule, named after billionaire Warren Buffett, who famously pointed out that he paid a lower tax rate than his secretary. This sparked debates about fairness in the tax system. Throughout history, tax loopholes have been a source of both humor and frustration, reminding us that while the tax code may be serious business, it can also be a playground for the clever and the crafty. Loophole number 1, the home office deduction. The home office deduction is a fantastic loophole for remote workers looking to save on taxes. To qualify, you must use a specific area of your home exclusively for business purposes. This means that your dining room table, while a great workspace, doesn't count if it's also the site of your family's epic taco night. To maximize this deduction, keep meticulous records of your expenses, like utilities and internet bills, and calculate the square footage of your home office compared to your entire home. For a humorous twist, imagine claiming your closet as a creative workspace because it's where you brainstorm ideas while surrounded by shoes. Or how about using your garage as an innovation lab for all those DIY projects that never quite made it to completion? With a little creativity and some careful planning, the home office deduction can turn your cozy nook into a tax-saving haven. Loophole number 2, the 529 College Savings Plan. The 529 College Savings Plan is a fantastic tax loophole for families looking to save for education expenses while reducing their taxable income. Contributions to a 529 plan can grow tax-free, and when it's time to pay for college, withdrawals for qualified expenses are also tax-free. This means you can save money now and avoid taxes later. Talk about a win-win. For example, consider the Smith family, who started contributing to their 529 plan when their daughter was born. By the time she's ready for college, they'll have a nice nest egg that not only covers tuition but also allows for some fun extras, like study abroad programs. Another example is the Johnsons, who used their 529 plan to fund their son's dream of attending art school, all while enjoying the tax benefits along the way. With the 529 plan, families can turn education savings into a smart financial strategy. Loophole number 3, the Health Savings Account, HSA. Health savings accounts, or HSAs, are a fantastic tax loophole for managing medical expenses while enjoying some serious tax advantages. Contributions to an HSA are tax-deductible, meaning you can lower your taxable income while saving for future healthcare costs. Plus, any interest or investment gains in the account grow tax-free, and withdrawals for qualified medical expenses are also tax-free. This makes HSAs a triple tax advantage. You can use the funds for current medical expenses, like that surprise trip to the dentist for a root canal, or save them for future costs, like your inevitable knee surgery after years of playing dodgeball. Picture this. You're at the doctor's office, and they mention a surprise charge for emotional support during your checkup. With an HSA, you can laugh it off, knowing you're prepared for those unexpected medical costs. HSAs are not just smart, they're a safety net for your health and your wallet. Loophole number 4, the charitable donation deduction. The charitable donation deduction is a clever tax loophole that allows you to give back while also benefiting your wallet. Donations to qualified organizations, whether cash, clothing, or even that old treadmill collecting dust in your garage, can all be deducted from your taxable income. It's important to keep detailed records of your contributions, including receipts and the fair market value of donated items. For instance, imagine donating your collection of vintage Beanie Babies. Who knew those little plush toys could help you save on taxes? Or consider the person who donates a slightly used karaoke machine, hoping to spread joy while also getting a tax break. These quirky donations not only help those in need, but also provide a fun way to declutter your home. So, the next time you're cleaning out your closet, remember, your unwanted items could be someone else's treasure, and a strategic tax benefit for you. Loophole number 5, the mortgage interest deduction. The mortgage interest deduction is a powerful tax loophole that can significantly benefit homeowners. Essentially, the interest you pay on your mortgage can be deducted from your taxable income, which can lead to substantial savings, especially in the early years of your mortgage when interest payments are at their highest. For example, imagine a couple who just bought their first home and are thrilled to discover that their hefty monthly payments come with a silver lining: tax deductions. They might joke about how their house is a money pit, but at least it's a money pit that helps them save on taxes. Picture them hosting a housewarming party, proudly proclaiming that their mortgage interest is working harder than they are. With this deduction, homeowners can turn what feels like a financial burden into a strategic advantage, making homeownership not just a dream, but a smart financial move. Loophole number 6, the business expense deductions. Business expense deductions are a treasure trove for entrepreneurs looking to lighten their tax burden. Common expenses that can be deducted include office supplies, travel costs, and even meals with clients. Just make sure those meals aren't at the fanciest restaurant in town unless you want to explain why you spent more on dinner than on your marketing budget. Proper documentation is crucial. Keeping receipts and detailed records can save you from a tax audit nightmare. Picture a small business owner who mistakenly tried to deduct their pet's grooming expenses as office morale boosters. While fluffy may indeed boost spirits, the IRS might not see it that way. Or consider the entrepreneur who claimed a home office deduction but forgot to mention that it doubled as a playroom for their kids. Navigating these deductions can be a hilarious adventure. But with the right documentation, you can turn your business expenses into significant tax savings. In this video, we've explored some incredible tax loopholes that can help you save money and make the most of your financial planning. From the home office deduction to the mortgage interest deduction, and from the 529 college savings plan to business expense deductions, each loophole offers unique benefits that can lighten your tax load. Understanding these loopholes is essential for maximizing your savings and making informed financial decisions. We hope you found these insights both entertaining and informative. If you enjoyed this video and want to learn more about navigating the world of taxes and finance, be sure to subscribe to our channel, give us a thumbs up, and share this video with friends and family. Your support helps us create more engaging content that empowers you to take control of your financial future. Thanks for watching, and happy saving!